All right, let's jump right in. We're going to talk about an asset class that, honestly, most investors completely ignore, but it might just be the single most important one for the decade ahead. We're talking about commodities.
Look, to really get a feel for the raw power we're dealing with here, just look at what happened with nickel. In one day, one single day, the price rocketed up 250%. Now, this wasn't some weird computer glitch. No, this was a head-on collision between real-world physical scarcity and a mountain of financial speculation. It was so powerful, it literally brought a global market to its knees. Welcome to the world of commodities.
So why should you care about this? Simple. Because when your traditional portfolio starts to fall apart, commodities often do the exact opposite. Think back to the 2008 crisis. Stocks absolutely cratered, right? Well, gold actually went up. Or more recently, when inflation went crazy, that classic 60-40 portfolio, well, it was treading water at best. Meanwhile, crude oil, a massive 55% return. So we're not talking theory here. This is a proven track record of protection when you need it most.
I think one of the biggest problems is that most people don't really get what commodities are. They kind of just lump them into this vague category of raw materials, but that misses the most important part of the whole story. So let's clear that up right now.
Okay, the one word you really need to lock in on here is standardized. It is the absolute key to understanding all of this. It means that one barrel of West Texas crude oil is, well, it's identical to any other barrel. That standardization is what makes these massive, liquid global markets possible, where price is driven by pure supply and demand. It's the complete opposite of stocks, where everything depends on the specific company, its CEO, its brand. You get the picture.
Let's break this seemingly complex world down. It really boils down to four pretty simple categories. First, you've got energy, the stuff that literally powers our entire world, like crude oil. Then you have metals, like copper, which are great indicators of economic health. Of course, there's agriculture, the most basic thing we need to survive. Think corn or wheat. And finally, there's this really interesting new category of specialty commodities like lithium, which are absolutely critical for the future we're building.
Okay, so why the urgency? Why does this matter so much right now? Because we are turning the page on a major economic chapter. Those decades of abundance, of cheap materials that we all got so used to, well, that party is over. We are walking straight into a new age, an age that's going to be defined by scarcity.
And what you're seeing here shows this isn't just some short-term blip on the radar. What's happening today is part of a much, much bigger pattern. History shows us these long 15 to 20-year boom cycles, called supercycles, that are kicked off by huge structural shifts in the global economy. And all the signs are pointing to the idea that we may have just stepped into the fourth one.
And this new cycle, wow, it's being fueled by this incredible mix of powerful forces all hitting at once. For one, we have decades of underinvestment in finding new supply. Then you've got this tidal wave of new demand coming from the green energy transition. And layered on top of all that is geopolitics. Countries are now literally using their control over resources as a weapon. It is the definition of a perfect storm for higher prices.
If you want to wrap your head around that green transition demand in a single number, this is it. An electric vehicle needs 4 times more copper than a gas-powered car. 4 times! Now multiply that by the tens of millions of EVs we're going to build, plus all the charging stations, all the grid upgrades. You can see pretty quickly how demand for some metals is just set to explode.
So you see the opportunity, you get the why, but how do you actually invest in this stuff? For years, it's kind of been a secret club for pros, full of complexity, full of risk, but that has totally changed. Let's look at how you can get exposure without all the headaches.
You basically got 2 main roads you can go down: futures or ETFs. Now, futures, that's the pro league. It involves a ton of leverage and some really weird complexities that can just silently eat away at your money. For pretty much everyone listening, ETFs are the answer. You buy them, you sell them, just like a stock. It's the clear, simple, accessible way in.
And even inside the world of ETFs, you've got a few different flavors. You can buy an ETF that holds the stocks of commodity producers, think mining companies or big oil, or you can get one that's backed by the physical stuff itself, like it literally owns gold bars in a vault. That's about as direct as you can get. Or you can use a fund that uses those futures contracts we talked about to track the price. Each one has its place, it just depends on what you're trying to do.
So how do we make this happen? What's the actual game plan? It's honestly as easy as 1, 2, 3. First, just start small. Target a 5 to 10% slice of your portfolio. That's it. Second, pick the right ETF for you.
And third, just check in on it maybe once a quarter to rebalance. That's all there is to it. There's no need to overcomplicate things.
So let's bring it all home. What's the big picture takeaway here? The most important way to think about commodities is not as some speculative bet to get rich quick. It's about something way more important than that. It's about protection. It's about insurance.
And hey, don't just take my word for it. This is backed by some serious research. Studies have shown that adding just a small slice of commodities to a portfolio has, over time, actually improved your total returns while lowering your risk. Just think about that for a second. Higher returns with less volatility. I mean, that's the holy grail of investing, right?
So, to wrap it all up, commodities play three crucial roles that really no other asset can. One, they're your portfolio's insurance policy for when stocks and bonds are falling at the same time. Two, they are your single most direct shield against inflation. And three, they are a powerful diversifier, making your entire financial setup stronger and way more resilient.
So I'll just leave you with this one question to think about. The economic world that shaped all of our old investment playbooks, that world is gone. We are living in an age defined by scarcity. The only question left is your portfolio still built for a world that doesn't exist anymore?